The Bank of England Governor Andrew Bailey has just warned that the current Iran war can spark a 2008 financial crisis in private credit. And Wall Street obviously believes this is going to happen because they've just started to build investment vehicles which allow hedge funds to profit from any turmoil or downturn in the markets, especially in private credit. So this is scaring the markets, this is spooking the markets, and the reason why this is spooking the markets is simply this. We can see crude oil is up to $120 a barrel in a single month. And here's the kicker. Iran has just said that one of the key details in the ceasefire agreement that they're expected to meet, which is to open or reopen the Strait of Hormuz, cannot actually be done anytime soon because at the outbreak of the war, Iran basically flooded the Strait of Hormuz with mines, and now they don't actually know where all the mines are. And they're unable, even if they do know where some of the mines are, to actually remove them because they lack the capability to do that. And the US, although it has some mine clearing operations, it also does not have specialty equipment to deal with all of the mines that have been laid in the Strait of Hormuz in any fast or expedient way. So analysts are now looking at this and saying that it's likely to be at least another 2 months. So 3 times essentially what we've just had, because we've had 1 month and we're looking at another 2 months. So we're looking at 3 months of the Strait of Hormuz being throttled. And this is now concerning investors that this could tip the global economy into recession because the Strait of Hormuz cannot actually be opened even with the best will in the world currently. So for those of you new to the channel, my name is John Fortune. I've been trading financial markets for over 18 years. And if you want to follow along with the setups that we're going to be looking at in today's video, you can download them in the free strategy guide in the pinned comment and the description below. And in today's video, I'm going to show you not just my trading plan for next week, but also some of the key currency pairs, which are showing us that the market is actually positioning for a growth shock, and they're taking this very, very seriously. Okay, so let's have a look at the dollar index, because last week we had this gap down. So what was this gap down caused by? This was caused by a catalyst. Was it in the economic calendar? No, it wasn't. So it's an unexpected catalyst. So an unexpected catalyst is some kind of external event, or it could be a central bank governor saying something. It could be the US president saying something. It's something which is not in the economic calendar or in the schedule to be announced or expected by the market. So we have this kind of unexpected catalyst, and unexpected catalysts are more difficult to deal with because they're unexpected, right? When it's in the economic calendar, we can kind of sidestep things. We can say, well, there's an interest rate decision on Wednesday, and so we're going to, be in and out before Wednesday, and then maybe we'll let the interest rate decision pass, and then maybe we'll trade the interest rate decision itself or trade after it, etc., etc. So those kind of catalysts can be a lot easier to navigate. When you get unexpected catalysts with some kind of comment or something like this, which is not in the calendar or planned for, the only real way to deal with that is risk management. And if you're in a trade, then it's risk management. If you're not in a trade, then obviously, the catalyst has come out and you basically say, okay, we need to give these markets a bit more room because everything's a bit more volatile. And personally speaking, I will look to try and trade things either deep in the buy and sell zone, and we're going to look at the quantitative buy and sell zones for all the pairs in today's video, but I'll try and wait for a deep test or a key area of resistance deep in the buy or sell zone, or preferably still, when we have a catalyst, I usually look to sell or buy from the second levels that we display. So without a catalyst, I'm looking at those first levels or a deep test. And with a catalyst, I'm looking at those second levels, and we'll look at those levels in a second. So going into next week, I do think we're going to see a little bit more dollar weakness, and I do think there are some good opportunities to short the dollar next week. But we have to pay attention to where we are overall. We have to take this kind of bird's eye view in the monthly time horizon, which is that, yes, we may get a little bit more weakness for a week or two in the DXY, but the Strait of Hormuz cannot be reopened anytime soon by the looks of it, based on what's being said. And if that's the case, the price of crude oil is going to continue to go up. And as the price of crude oil goes up, this is going to lift yields in the US and it's going to drag the dollar higher. So it does look like fundamentally we are still set. Although we bounced off the top of this range, we are set for this to break out. And that, of course, would coincide with a growth scare, because once you start to get crude oil prices going too high, yes, it's inflationary, but at some point it becomes deflationary and it becomes more, instead of an inflation shock, a growth shock. So I am looking for some potential short opportunities next week in the dollar because of this. But just bear in mind where we are. I do think potentially even by the end of this month or going into next month, we could start to see the dollar re-accelerating to the upside. And we're going to look at the portfolio selection now to really drill down and see what the best setups are heading into next week. So going into next week, the two currencies that stand out to the long side are the Euro and the Aussie. And these are the two currencies I primarily want to be long, and we're going to be looking at Aussie and Euro setups primarily in today's video. And to the short side, you can see we do have the Japanese yen. We also have the US dollar, but I do think the US dollar, even if we're looking at shorts next week, probably by the back end of the month is going to start to pick up again. And what's interesting here is look at the Canadian dollar. The Canadian dollar, especially against some of these EU majors, and this is what I'm going to show you in today's video, EurCad especially, they're actually positioning for large breakouts to the upside. And in inflationary regimes, the commodity currencies outperform, especially the Canadian dollar as crude oil is going up, the EU currencies. So the fact that currency pairs like EurCad are setting up for major rallies suggests that markets are actually positioning, foreign exchange traders are positioning for a growth shock rather than inflation shock. So that really fits in to what we've just discussed, because we've got the Bank of England governor saying that this is the risk. We've got Wall Street actually building investment vehicles so investment funds and hedge funds can profit from this. And we also have Forex markets now positioning, and Forex markets are usually the truth serum of the global economy. So all of that is pointing towards a potential growth shock. And of course, the only way that could be avoided is if the Strait of Hormuz is reopened, and it doesn't look like that is actually possible at the moment. So going into next week, I'm going to be looking at Aussie longs primarily. We're going to be looking at Euro longs. We're going to be looking at the Japanese yen as a top short. We're going to look at some dollar shorts, and we're going to look at some Canadian dollar shorts. You could also look at Swiss franc shorts to the downside, and to the upside. Here's the thing. Everything outside of the Aussie and the Euro is kind of a bit weak. So you can kind of pick which one you want. I'm going to go primarily with the EU major. So that's what I see. Those are the pairs we're going to be looking at. Primarily the Aussie pairs, Aussie CAD, Aussie dollar, Aussie yen. We're going to look at EurCad, Euro dollar, Euro yen. And we're also going to look at pound CAD, pound dollar, pound yen, as well as the other dollar pairs. And of course, Bitcoin, Ethereum, oil, gold, and silver. Okay, so let's go through the watch list, starting with Euro dollar. And remember, guys, if you get any value at all out of these videos or you find them helpful, be sure to like, share, and especially subscribe. It really helps the channel when you do that. And a big thank you to everybody who has subscribed to the channel so far. Now, many of you will know, if you watched the video last week, I was looking at Euro dollar for short positions, and Euro dollar was a 5-star setup. So what is a 5-star setup? It's where it basically has 5 key points from being overbought during the week. It then has a key area of horizontal resistance, has a key area of trendline resistance, a key area of dynamic resistance, which is moving averages, and it's also in the portfolio selection. But here's the thing. It doesn't matter how good your setup is. If you have a catalyst, as soon as you get a catalyzed market, and this could be whether you've got breaking news on a small cap or micro cap stock, where you've got an interest rate decision with a currency, or you've got an unexpected catalyst, which is basically a catalyst which is not in the economic calendar, support levels or resistance levels are not going to hold in the same way they would normally. So a catalyzed market instantly switches, generally speaking, to a breakout trading system. But if you're not breakout trading, you just sidestep things, right? You just kind of avoid them. So last week I was looking for a short right in this area. And we started to push up into this area. And as soon as we got close to it, and I was looking for a short, we get that news of the ceasefire, and the dollar just kind of gaps down, and we get Euro dollar ripping to the upside. So obviously, this is where now I start to look and say, okay, well, we've got an unexpected catalyst. I'm not involved in the short yet. It's just pushed into its upper bound, but it's pushed into its upper bound with a catalyst. So now what I'm doing is I'm anticipating this to potentially come up to its second upper bound. So these gold levels here, these are essentially for catalyzed markets. That's one way you could look at it. If you don't have a catalyst anywhere in the sell zone or the buy zone, I'm looking to be long. If you've got a catalyst, then generally speaking, these markets will push to their second gold level, which is why we have them on here every single week. But most of the time, these markets aren't catalyzed. I mean, we've got a lot of volatility, with the Trump administration, going to war in Iran. Before that, they were kind of jawboning the dollar down, jawboning crude oil down, etc., etc. So that has brought with it volatility. But even then, most of the time, these markets are not going to second upper or lower bounds because they're not catalyzed. You know, they don't have the firepower to do that. So last week, we get the catalyst, and this market ends up pushing almost to its second upper bound. And in fact, right here, I took a short right at the end of the week, and it kind of just chopped around a little bit, and I ended up taking it off for break even because I wanted to see this reverse. It was actually after CPI yesterday. I wanted to see this reverse almost immediately, a new shakeout trade, right? We get a news event coming out. It pushes in one direction, and I use that to short, you know, if I'm looking to be short anyway. And all of that is in the free strategy guide again. Same with catalysts and unexpected catalysts. It's all covered in the free strategy guide for you. So if you don't know what I'm talking about, you know, grab the strategy guide and it's all explained in there. But basically, you know, on the CPI, I'm looking for a short here last week in real time with members. It doesn't go anywhere, so I scratched the position. So now coming into this week, you can see I'm looking to more or less reverse my bias, right? So now I'm looking for it to pull back, and I'm looking for it to dip into the moving average, and I'm looking for at least, you know, 1 or 2 days to the upside. I would not look at this, you know, in terms of a long-term trade, because I do think, like I said, fundamentally, there is still a lot in play to push crude oil prices higher. So that's what I'm looking for next week. If we jump over to the multi-charts, it looks like there's a ton of things going on here, but there's not really. Basically, these levels are just the prior breakout levels that have been added, and you can see the dashed ones are kind of the levels that hold kind of within one candle. And then the blue level here is that buy zone that we just looked at in euro dollar in hedge dash, and these are just simply the candles of the monthly chart. So, you know, you can see right up here, this high and this low is simply, you know, this candle over here. So aside from what we just looked at with the buy zone, which is down at the 1.16106, you can see that essentially what we'd be coming back to do is to retest the overside of the moving averages. And notice how usually you need some kind of catalyst to reverse trends. So even if this is going to be reversed temporarily, you know, maybe it pushes up, you know, test the left shoulder over here. Even if it's just a temporary reversal, you needed that catalyst to break it from this sell-off. And that's how markets kind of tend to move. And this is why if you're trading mean reversion like I do, you sidestep catalysts, you know, and if you're in a trade and unexpected catalyst comes out, then you have to risk manage it. So I am looking for a potential 1 or 2 day bounce. What I quite like about this is any kind of pullback into the buy zone. This is actually setting up nicely from the prior week's high. So I'd be looking for this kind of pullback, a dip below last week's high, and a bounce. The only thing I will note here is that we are actually still inside this monthly range. And, you know, we did close down below the 90 EMA on a monthly basis. So I do wonder if, even if we have an up month, generally speaking, if you close down below the 90 EMA, you go to the 21. So I do think there's more downside here. But for next week only, I'm looking for a 1 or 2 day bounce from the 1.16106. Next is pound dollar. Now, if we look at this in hedge dash, the buy zone starts at the 1.33175. So this is where next week pound dollar would become quantitatively oversold. And this is a pullback to the moving average, but it's actually kind of inside a range. So there's two types of ways you can play ranges, or two types of ways that we play ranges. And that is that essentially you can trade the extremity of the range kind of back to the middle, or you can actually trade the middle back to the extremity. And, you know, from the extremity back to the middle, we call this a type 1 range reversal play. It's in the strategy guide again. And from the middle is a type 2. So what we're looking at here would essentially be a type 2 range reversal play, right? Because it's in a range, it bounces from the top. And bear in mind, pound dollar, and this is one of the reasons why I shorted euro dollar at the end of the week on CPI, was because 1, 2, 3, 4, 5 days up, usually you don't have 5 days up or 5 days down in a week. It does happen. And when it does happen, you usually get the reversal the following Monday or Tuesday. We call this a Monday, Tuesday reversal play. So if we're set for a Monday, Tuesday reversal, it could pop higher a little bit, you know, at the top of the range. What I'd be anticipating is a pullback towards the moving average. And I would be looking at essentially for this to turn oversold during the week and for a 1 or 2 day bounce higher. And it's that kind of range play, but from the middle of the range that I'd be looking at next week in pound dollar. So if we quickly pull this up on the multi-charts, you can see the big weekly candle we've got here. So this is what I'd be looking for next week. I'd be looking for this to come down. Here is the buy zone. And you can see the moving averages would kind of flatten out, and it would basically be a test kind of similar to this. Test of the moving averages here in the 4-hour time frame, and a bounce only for 1 or 2 days, just looking for a short-term trade. And you can also see it sits kind of right at the prior high of last week. So we could very easily push through the high, you know, wick the buy zone and bounce, and that would just simply be a pullback and a test of this area here, and then a bounce, you know, for 1 or 2 days up. That's what I'm looking for in real time next week with members in pound dollar. Next is US dollar Japanese yen. Now, US dollar Japanese yen, the buy zone starts at the 157.47. We just looked at the portfolio selection, and although the US dollar and the Japanese yen are both shorts, the US dollar is actually stronger. And I think the US dollar versus the yen as a currency pair really gives away the game as to whether we're about to see US dollar strength or Japanese yen strength. In other words, are we going to get the US dollar re-accelerating, or are we going to see some kind of recovery in the yen? And so I am only looking for long opportunities still in US dollar yen below the 157.47 where we enter the buy zone. And what you'll see is that there are a number of really nice key levels sitting at the buy zone next week. So if we jump over to the multi-charts, you can see not only do we have the daily low down here, sitting right at the buy zone, which is 157.47. But this is also the prior significant low, which we broke through, pulled back, retested, and then we broke through and we tested once, and we'd be looking to test again. So what I like about US dollar yen is, look at this in the higher time frame, in the weekly time horizon. We are above the prior key area of resistance. So we've broken down, we've broken through this. So we're essentially trending to the upside in the weekly. And we've pulled back for multiple weeks, tested the 9 EMA. Look at where we closed. We held it last week. We also have this up month last month. And even with that sell-off in the dollar, look at the monthly candle at the close of the week. It couldn't even recover versus the US dollar. I'm talking about the yen, off the back of the ceasefire agreement and a sell-off in crude oil. Guys, I've been saying this for a while. The Japanese yen is in big trouble. And last week, I think, really proves that. I'm surprised the Bank of Japan didn't intervene, you know, when they had the opportunity last week when the dollar gapped down. That would have been a good time to intervene and just kind of pour fuel on the fire and try and get the yen going. Because the yen, I mean, really failed to do anything against the dollar last week. So the money came out of the US dollar, but it didn't go in the yen. People just do not want to put their money in yen. So I do think going into next week, if we can pull down into the buy zone, I would be interested in a buy the dip. And I have noted this monthly candle. And I'll show you something else really interesting here. We have a massive inverse head and shoulders setting up in the monthly time horizon. And look at where the target for this inverse head and shoulders takes us. In fact, you can't see it here because there's not enough data on the chart. But this takes us into a major key area of prior support. So here's the monthly inverse head and shoulders. So I do think US dollar yen overall is coming up to 175.58. And any pullback into the buy zone next week, I will be still looking to buy the dip and looking to potentially short the yen against some of the other currencies as well. And if I just pull up a US dollar yen chart with more data, you can see this is the key monthly support level we broke through. And the inverse head and shoulders in the monthly, the target sits right at, in this case, 175, 176 level, and the underside of the support at the 177. That is where I think we're going in US dollar Japanese yen. Next is US dollar CAD. Now, the Canadian dollar as well as Japanese yen, they're both kind of weak. So what this is doing is this is setting up a scenario in which we could potentially capitalize on dollar trades next week, regardless of whether the dollar goes up or down. You know, because in US dollar CAD, last week I was looking for potential buy the dip. It came down. And look at this reversal day right at the end of the week. In fact, that's what I was looking for in Eurodollar. But that reversal day at the end of the week from the buy zone, because this tested the buy zone last week right here, that is what I was looking for in the dollar pairs. But coming into this week, I am once again only looking for a potential long opportunity. And because we're below the moving average, this becomes a range play. But again, this becomes a potential range play from the extremity of the range. So I'm looking for US dollar CAD below the 1.3757. And notice how if we get dollar weakness next week, I'll be looking to potentially buy US dollar CAD and US dollar yen. And if we get US dollar strength, and euro dollar pushes down, pound dollar pushes down, then I can also step in and buy those versus the US dollar and look for the weakness coming into the back end of the week. So this is really what we're doing. We're being reactive and we're setting up scenarios where we can potentially profit regardless of if the dollar goes up or down. That's really where we want to be, if possible. So a quick look at US dollar CAD on the multi-charts. You can see here we had this big up month and now we're pulling back this month. And we've got this really nice key area resistance and another one here, which sits right at the 1.3757. So any pullback into this area, that's where I'm going to be looking for a 1 or 2 day reversal in US dollar CAD next week. Next is US dollar franc. Now, both of these are kind of weak going into next week, and I am prepared to short the dollar, short the Swiss franc. And when you get two weak currencies, what tends to happen? They range. And you can see this market in terms of price action is forming a potential range. We're broken down below the moving average. And if we hit the buy zone, I'd be looking for this to come back, potentially sell off, push through, hit the sell zone, maybe in a subsequent week, etc. So as it currently stands, I do favor the long setup in US dollar franc going into next week. That's what I'll be specifically looking for, because not only do we have some really nice key levels of support in the buy zone, as we'll see in the multi-charts now, but also we've just talked about how crude oil is likely to stay elevated because of the inability to clear the Strait of Hormuz of mines anytime soon. And of course, all these mines in the Strait of Hormuz is what's preventing ships from sailing through, right? They can only go through a very narrow corridor which hasn't been mined. So until they clear those mines, it can be very hard to expand the shipping lanes. And of course, if that's the case, the US dollar is likely to make a recovery in the next few weeks. So if we look at the multi-charts, look at this here. We have an up month, and look how nice this is. We've got the prior key area of support, and this is where you break down, you fail, it turns into an inverse head and shoulders when you retest it. So it's a test of the left shoulder in the monthly time horizon. The monthly time horizon is more important than the weekly, more important than the daily, etc. But not only that, it sits right at the high of last month. So I think there's a very, very good chance if we pull down next week in US dollar Swiss franc and we test the 0.78187, which is where we turn oversold next week, this market has a very good chance of bouncing really nicely for at least 1 or 2 days. That is the setup I'm looking for in real time with members next week. Next is New Zealand dollar. Now, New Zealand dollar, I'm not sure is a fantastic setup, honestly, going into next week. We had a pretty big rally. And, on balance, it's kind of neutral still. The New Zealand is kind of weak. The dollar's kind of weak. And on balance, slightly bullish to neutral rating in New Zealand dollar as a pair. But here's the problem. The overall trend is to the downside. We've kind of bounced at this range low down here. And when we look at the multi-charts, you'll see we're in the middle of a massive kind of monthly consolidation. We're right bang in the middle of it. So the direction is really unclear. There is a potential pullback into the moving average and into the buy zone. The only thing I don't like about that is if we get some kind of re-acceleration of the US dollar because of a re-escalation between the US and Iran, or, this kind of growth shock starts to really take hold of markets and we really start to see some pricing in and we find out actually this was just more of a relief rally. If we buy the dip down here for 1 or 2 days and it ends up, getting catalyzed to the second lower bound, maybe in the other direction, and that's not very likely, but the problem is then we're kind of on the wrong side of New Zealand dollar to the downside. So it is a setup, a buy below the 0.575877, but I think you could probably trade this both ways. And on balance, because of what we've just discussed with the Strait of Hormuz potentially not being open for a while and crude oil going higher, I think on balance, if we actually had another leg up in New Zealand dollar, I probably would actually look to short in line with a bit of dollar strength above the 0.5915. And I'll show you exactly what I'd be looking at. So on the multi-charts here, you could see any kind of push into the 0.59150. We are still below these monthly highs over here. And this would be trading right into this monthly low over here. And the reason I have these on is because weekly and monthly highs and lows, they do actually act as kind of support and resistance levels. And so I would actually be kind of interested, we're above the 50 period moving average and price tends to range around the 50 period moving average. So I would be interested in kind of a range trade, if we can push into the sell zone and test this prior low. I don't think it's the best setup. We cover all the dollar pairs every week, but that definitely is on my watch list next week. And I would potentially take a short from the monthly low over here in the sell zone above the 0.59150 if we get there next week. And the final US dollar pair is Aussie dollar before we move on to Bitcoin and Ethereum. And what's interesting about here is you can see we've broken out of this downtrend, and any kind of pullback into the buy zone sits at the prior lows over here, and it sets up this potential kind of inverse head and shoulders, and it would be right into the moving average, a kind of pullback into the moving average. Now, I've already noted that, you know, at least one, maybe a couple of these dollar pairs are Monday, Tuesday reversal plays. And we also have over here the Aussie dollar pair, which is overbought on a rolling daily basis. So this also suggests a bit of Aussie dollar weakness for 1 or 2 days. So combine that with the fact euro dollar also looks like, you know, it is setting up for a Monday, Tuesday reversal play. It tells me, when we put the pieces of the puzzle together, that we're probably, not guaranteed, but probably going to get some near-term strength in the US dollar as this kind of neutralizes, and as we get, say, a Monday, Tuesday reversal play setting up in euro dollar. And again, it might be Tuesday, Wednesday. Maybe, you know, it pops higher on Monday, but then we get Tuesday and Wednesday pulling back. Well, if that's the case, it does mean we might actually end up getting these kind of opportunities where we get dollar strength and then we can short the dollar rather than the other way around. So it doesn't really matter, because if it happens the other way around, you know, if this blasts higher, I'm not going to be shorting Aussie dollar. Instead, what I'll be doing is I'll be pivoting to maybe something like New Zealand dollar or buying US dollar Swiss franc. So that's what I see in the dollar pairs going into next week. And one thing I do really like about this setup here is you can see in the daily time horizon, any kind of pullback in this area is actually at the prior broken resistance, which is also the prior weekly high. So this is a really nice opportunity down here in the buy zone below the 0.69690 to look for just at least 1 or 2 days bounce to the upside. And that's usually what I'm looking to capture, is between 1 and 2 days worth of volatility. Okay, so let's have a look at Bitcoin and Ethereum before we go and have a look at the non-US dollar pairs in Forex, which are showing really good setups heading into next week. So very quickly, just to finish off the dollar pairs here, Bitcoin is a market which I've highlighted is in this kind of inside month. And in order to get short, you know, I'd be looking for a break down below the monthly low. And we haven't actually achieved that yet. In fact, look what happened last week. We traded up to and closed above the 9 EMA. And this suggests we're probably going to head back towards the 20 period EMA in the weekly time horizon. So what it actually looks like now with the failure to break lower, you can see we have this week that closes up, this kind of strong week. Now I would actually be looking for any kind of pullback into the moving averages here and using that as an opportunity, just like we pull back in here into the moving average and we start the next leg down, using that as an opportunity to look for the next leg higher, because now it looks like we're actually going to at least revisit the top of the inside month. So we're going to test the high of the inside month instead of breaking through the low. And that also sets up not only this swing high, but if we do push to the 20 EMA, you can see that actually would be a retest of last month's low. So it may be the case that we are going to get one final push up in cryptocurrency, you know, kind of like over here, we had this A and then B and then a C. It looks like we're kind of getting that kind of A, B, and C again. So I would be looking for a first target of the monthly high. But if we break through the monthly high, I do think there's a good chance we make our way to the 78.50 and potentially even retest the underside at the 80,000 level. So as it stands, that's what I'd be looking for next week in Bitcoin, because notice how we actually had an inside week. Remember how we're talking about a breakdown of the low of the inside month sets up the next leg down? Well, we had the kind of mini version in the weekly where we have an inside week and we break through, and now it's doing the opposite. So that's what I'm looking for in Bitcoin. But just bear in mind, if things start to go a little bit south with stocks, you could be on the wrong side of the next leg down. So it's a counter trend trade, but that's what I see coming in Bitcoin. And Ethereum is a very similar setup. We had the inside week again, and I was saying to you guys, you know, I really want to see a breakdown below the inside month low before we start the next leg down. Instead, we break the inside week, we come back and retest it, and now look at Ethereum. So it looks like we're set to close above the 9 EMA once again. This is going to open up the prior high, the monthly high, and also the 20 period moving average, which is also sitting just at the underside here of the 2,600. So anywhere between 2,500, 2,600. If you can break the high over here, that opens up the 2,500, 2,600, which is the underside over here. So overall, again, any pullback into the moving averages like here, I would be looking for moves higher into, first and foremost, the monthly high, and then into the 20 period EMA at 2,500 and the underside of this at 2,600. But just bear in mind, once again, it is counter trend in the higher time frames. Okay, so let's look at some of those non-US dollar pairs in the portfolio selection, or in line with the portfolio selection from earlier on in the video. Aussie yen is sitting at the top. This is a market I can only be a buyer of. And this is essentially a pullback, a dip into the buy zone, into the daily moving average, and a flip higher for 1 or 2 days at least, if not for the next swing high. So that is what I'm looking for, a trade down below the 110.95 in Aussie yen next week. We are overbought on a rolling daily basis, so it probably needs to pause, most likely needs to pause and correct for a couple of days. And you can see, apart from the daily moving average, this kind of dynamic support, there isn't really too much in terms of support over here in the 4 hours, maybe down here. But, you know, perhaps if we push into the buy zone and we retest the prior weekly high, that would be a good place to time an entry from. But notice how we're trending above the moving averages on all time frames. And we even came back, tested the 9 EMA, and we held it. We didn't close below it, and now we're making our way back towards the highs. So I do think we're going back towards the highs. So in any pullback in this market is a buy the dip opportunity, in my opinion. Next is AussieCAD. Now, AussieCAD is setting up a 5-star setup heading into next week, and we'll look at that in the multi-charts. But the buy zone starts at the 0.96833. And this is essentially a dip and flip trade from primarily the daily moving average. If I pull up the multi-charts here, you can see this is where we get 4-hour trendline support right here. We also have prior 4-hour resistance. We also have the prior weekly high, and the buy zone starts at the 0.96833. And this all intersects right on the 20-period moving average as well in the daily time horizon. So we've got the portfolio selection, we've got the dynamic support at the moving average, we've got oversold during the week below the buy zone, and we also have the trend line support, and we have horizontal support. Now we do have employment data coming out of Australia on Thursday, so I'd rather be in and out of this opportunity before then. But if you get amazingly weak data coming out on Thursday and this sells off into the buy zone, again, consider, just like with US dollar, if it's a catalyzed move, maybe, you know, wait for a deeper test or even look for the second lower bound. But I don't think that's going to happen next week. I think there's a very good chance we get this opportunity before Thursday and we can be in and out of this setup before the Australian employment data on Thursday. Next is pound yen. Now, this is a buy or do nothing for me. And notice how very often when we look at a market kind of moving into the buy zone, we have the moving average usually in the middle of the range. But here, the moving average is sitting at the buy zone. So this tells you we're starting to pull away from the moving average. We're really getting some momentum coming into the upside. So any kind of pullback is a dip and flip setup from the moving average and the buy zone for 1 or 2 days below the 211.94. And if we pull up the multi-charts here, look at this. Bull flag in the monthly time horizon, inside months, so volatility is contracting, and a break of the high. This is showing you the Japanese yen is in trouble. It's just another piece of the puzzle to say that the Japanese yen is facing a much bigger sell-off. It hasn't actually materialized yet in yen futures, but I do still think that's coming, and I did a video about this primarily, you know, a couple of Weekly Forex Forecast videos ago. So I know in the 4 hours here, it looks like this is never going to come down to here. Look at the distance here. This is never going to pull back, but these levels are for the week. This is only 3 days up. You can just as easily get even 2 days down into this. So any kind of dip below the 211.95, this is where I'm going to start to look to be a buyer of pound yen. And again, we do have the dynamic moving averages down here. There isn't too much support otherwise. It may be a good idea to drop down to the 4-hour chart or the 1-hour chart and actually look for some double bottom reversals like this in the buy zone. That's what I tend to do when I don't have any daily or significant 4-hour support in the buy or sell zones. Either way, I can only be a buyer of this market. Look at this massive weekly candle. Any kind of pullback intra-week is a buy the dip opportunity in my opinion. And wrapping up the Forex pairs with EurCad and PoundCad before we move on to crude oil, gold, and silver. And these are the two Forex markets that I think are really showing us that the market is actually positioning for a bit of a growth shock. Because when you get higher inflation, you will see the commodity currencies, especially the Canadian dollar, if you've got crude oil going up, you'll see them outperforming the EU currencies. And what we're seeing here is on the daily time horizon, obviously we're starting to move up here. So just as a basic setup going into next week, I'm looking for that dip and flip. So we've got momentum. So any kind of pullback into the moving average and into the buy zone below the 1.61037. This is where I'm going to be looking for a 1 or 2 day bounce, and potentially that could be the next swing high as well. We see this usually markets have bigger swings from their weekly upper and lower bounds. So that's what I'm going to be looking for specifically as a setup next week. But if I pull up the multi-charts here, look at this on the monthly. This is a very, 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 very bullish setup. And what I really like about EurCad next week is, if you look at this on the monthly time horizon, you can see it's the prior monthly high, which is where the buy zone sits. So I've added the buy zone as this blue level, the 1.61030. But this is actually right at the prior monthly high. So I would be looking for a pullback into the buy zone and a bounce from last month's high. That's basically what I'm looking for. So if we get that pullback, I am going to be looking to buy it. But what is super bullish about this is we have this big kind of bull flag set up. We came down, we tested below the 9 EMA and the 20 EMA, and we reclaimed both of those within the same month. Not only did we reclaim both of those within the same month, we also reclaimed the prior monthly low. That is super bullish. And that suggests that we are about to see significant upside because this is a monthly pattern. So what does significant upside in EurCad mean? In the monthly time horizon, that's risk off. That's what you would expect to see when stocks sell off, when you get deflation. When you get deflation, the EU currencies outperform the commodity currencies. And when you get inflation, you tend to see the commodity currencies outperforming the EU currencies. So this huge monthly setup here in EurCad is really showing us that Forex markets are actually positioning for a potential growth shock, not an inflation shock anymore. Basically, crude oil has gone too high that it's going to start to cause, stocks to sell off, and it's going to cause the economy globally to slow down. I know that's the opposite of what we got last week because we had the ceasefire, but the market's looking through this ceasefire into the next 6 months. And finally, we have PoundCad. So PoundCad is a dip and flip setup below the 1.61037. So any pullback into this area and a retest of the moving average in the daily, we've already got portfolio selection, oversold, and the moving average. We've got a 3-star setup anyway, and that's if we don't even have any other kind of key support. So that's what I'm looking for a 1 or 2 day bounce next week. Look at the setup in PoundCad as well. Super bullish. We've reclaimed the 20-period moving average and the prior low in one candle. It's a first-degree breakout. It's the strongest kind of reversal. So once we break this high, this is going to set up the next leg to the upside. Very bullish setup in PoundCad. I only want to be a buyer of this market. Crude oil we discussed kind of at the beginning of the video somewhat, but we are trading above the prior high in the monthly and the weekly. So these are trending to the upside in those time frames, forming kind of bull flags. Yes, we're chopping around the lower time frames, but we did trade into the weekly lower bound last week. That was the low. This was the weekly lower bound previously, and this was the weekly lower bound previously. So notice how every time we hit the weekly lower bound, we made a new attempt high. So we did hit the weekly lower bound last week. It did hold price, and we're sitting at the key area of resistance over here. I would be looking for upside now, but I think just to be safe, I'd like to see crude oil cross the 50-period moving average. And the first target to the upside would be the underside breakout over here, roughly at the 112. Okay, so wrapping up the video with gold and silver. Now, gold and silver are both stuck in no man's land, so you really have to wait for the breakout, very similar to crypto, how we're looking for the break below the monthly lows, because they could break out either direction from here. Now, in gold, what I'd be looking for to the upside is, you can see the double top here. We attempted to break and we closed back inside with one candle. And we've got this kind of trend line to the upside, which is capping it to the downside. So basically, what I'd be looking for is a trade above the 4780.96. If you can close above here on a daily basis, you can look up to the price swing low, which sits at the 4,850. That really is the only thing we can look for, because you can see last week we actually had this weekly candle closing back inside. So again, we are below the 9 EMA in the weekly, but we're above the 9 EMA in the monthly. So we are absolutely stuck in no man's land. You have to wait for a breakout in these markets. And this would be the breakout next week to the upside. If we get dollar weakness, that sets up the run to the 4,850. And finally, we have silver. So I just showed you the breakout to the upside in gold I would be interested in on dollar weakness. Now I'm going to show you the breakout to the downside in silver if we get dollar strength. So it's an if-then process. And as always, if we get dollar strength, I prefer to short silver. And if we get dollar weakness, I prefer to buy gold. So what I'd be looking for next week in silver is a breakdown below this trend line. And if you break down below this trend line, the 50-period moving average in the 4 hours will follow it. And I would be looking for a move, a pullback, and a move back down into the range low at the 64.017. And that is the range that silver has been in for the past few months into February. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge Hedge platform is included with every GMT membership.